Hello, and thanks for joining us today. I'm super excited you could be here. Look, today we're talking about flexible funding. We're talking about fast funding. We're talking about some of the best small business funding, but we're talking about it in the Canadian market. So many of you are asking, does this apply in Canada? I can't not tell you. I think it's the most common question I've ever asked about business credibility and financing on the show. And I'm always disappointed to say, no, I'm sorry. It's very hard to get money in Canada. But now, guess what? We found like the leader, like the top dog in the actual space up there to be able to help all of you that are from the Canadian market that are looking to be able to get funding for your business. So with us today is David Jentz. Now, he's actually an award-winning entrepreneur. He's a fintech leader. He's also the founder and CEO of Merchant Growth, which is one of Canada's leading online small business finance companies. So from humble beginnings in his apartment, David actually built the company into a national organization with offices in Toronto and Vancouver, helping thousands of Canadian small businesses access the capital they need to be able to grow and to be able to succeed. So with deep expertise in alternative lending, he's got experience in financial technology and scaling businesses. He is driven by a mission to make funding more accessible through innovative digital solutions. So he's a recognized voice in entrepreneurship and fintech. David actually frequently shares insights on business growth, digital lending, and also evolving landscape of small business finance. And his experience and his expertise and forward-thinking perspective make him a very, very good source for us to be able to dive into to talk about all things funding Canada. David, thanks for joining us today.
Thanks for having me, Ty. That was an awesome intro.
Yeah, man, I'm excited you could be here. So let me dive in and start. Canada market. Now, are you from Canada originally?
Born and raised in Vancouver, British Columbia. You got it. And really, the way I started this business was by looking at what's going on in the U.S. It was 2009. I had read about this growing market in the U.S. for non-bank small business financing. We were coming out of the great financial crisis, and banks were only going to get tighter on providing credit. And I just looked at my own market here in Canada and concluded that it was in its infancy relative to what had developed in the U.S. So U.S. already at that point had some pretty big players, and it's over a decade of kind of history with that type of product. Whereas it did have a couple players, but they were small. They just got started, and the awareness was quite low. So I figured the Canadian market would catch up to the U.S., and that was kind of central to the thesis that I had to get in the business in the first place.
Well, that's interesting. And it doesn't seem like it has. Like, I think and we were talking about this before we took off, it's really harder than I would expect that it is for a lot of small businesses to get funding from what I see in the Canadian market. Is that accurate? And why is that the case?
I mean, it's come a long ways from, when I first started. There are a handful of good sized players now. But to your point, there's hundreds and hundreds of financiers in the US market. Whereas, you're looking at really, single digit numbers in terms of the ones that matter, maybe a couple dozen if you include some smaller ones. So it's a much smaller market. We're 1/10 the size of the U.S. in population. But to your point, we have, even fewer lenders here than the 1/10 rule would imply that we maybe should have. So, I think that's, similar makeup as, the Australian market, UK, like these kind of markets that are, 1/5 to 1/10 the size of the US market. You just tend to see less competition because they're just a smaller market to go after. And you can't really build a too niche of a business. You can't just focus on a specific industry or a very narrow part of the credit spectrum, or else you just don't have enough of an opportunity. So everyone has to be a bit more of a generalist, and there's just kind of less room to build niche businesses in a market like Canada.
Yeah, makes sense. So, what problem did you really seek out to be able to solve? I mean, what is it that merchant growth that you guys are doing up there with alternative financing now?
Yeah, the problem we wanted to solve was the fact that uh, bank credit boxes were based on rigid rules and really based on tangible collateral. It was about, does the business owner have real estate to pledge as collateral? If not, then, maybe you get a small credit card, small overdraft in the bank account, but you don't get meaningful growth capital in the form of credit for your business. So we looked again at when I was kind of writing the initial business plan at this sort of multi-decade secular trend of less and less lending by traditional financial institutions, which was only going to get accelerated post Great Financial Crisis. So that was the problem we were trying to solve. I was passionate about becoming an entrepreneur. Come from a family of entrepreneurs, and I love this business idea because it's a business where we actually support a whole bunch of other entrepreneurs and get to meet them, get to know what they're all about, and come across all sorts of different businesses that we now get to help fund their growth. So it's a fun business to be in.
Yeah, it's definitely exciting, especially out there in the market that you guys are in. So, what kind of financing options do you provide your clients, your borrowers?
Yeah, we have a term financing product, our most popular. So, you're looking at terms of 6 to 24 months, um, and daily or weekly pay. It can be a loan agreement, which is just a standard fixed payment, or it can be a receivables purchase, more of a merchant cash advance type product where the payment flexes with your revenues. So those are the main products we offer today. We are constantly innovating. We are going to be making it easier for folks to redraw as credit becomes available as they pay down their initial funding with us. Do so on an automated basis. We also have what's called merchants market. So for existing customers, they can get preferred pricing and setups with a whole variety of different vendors that provide tools to help businesses with payments, payroll, HR, legal, what have you. So we want to kind of be a one-stop shop for someone to just really finance their business, grow their business, and ultimately succeed.
Yeah, I love that. So, what kind of borrower are you typically looking for?
So most small businesses are asset light, but they have cash flow. And again, if they're asset light, that means they're not going to fit that bank credit box. There's a lot of small businesses out there. That's true of, in pretty much any market you look at. But that asset light cash flowing small business is the one that has the most challenge in getting traditional financing. And so that's our ideal customer, one that's got some some history, not necessarily years under their belt, but they need at least 6 months so we can actually understand what the cash flow profiles looks like and how that's trending. And then based on that, we're able to make financing available for them. So a business that has consistent cash flow. So if you're kind of like pulling oil out of the ground or commodities out of the ground, that's kind of too lumpy, and your exploration level, that's a lot of that in Canada, right? Because we are a big resource nation. Those companies can't qualify for our product because they don't really have the cash flow profile to support the credit we provide. But it's a lot of brick and mortar. It's a lot of business to consumer business models. People paying every day for product. Those fit really nicely. But we also operate in B2B spaces, wholesale, distribution, manufacturing, et cetera, as long as those cash flow profiles are consistent enough to support the credit we provide.
So, when you talk about cash flow profile, what kind of cash flow profile are you looking for?
So a certain amount of inflows into the operating bank account on a monthly basis. We want to see at least kind of a deposit a week coming in there. Again, if you're B2C and you're selling something every day, then you probably have deposits coming in daily. And again, how are those varying, right? Like, are you super seasonal? Do you close for the winter or something like that? That's going to be a little too seasonal. We do see a lot of seasonal businesses, especially in Canada. We've got a rough winter that slows things down for a lot of sectors. But you do need to be kind of open year round, and there needs to be some predictability in that cash flow for us to really bank on it.
So, what is the thing that borrowers come in and are, if they're declined, what is one of the biggest reasons that you see that they're surprised that they declined, that they didn't know was a disqualifying factor?
Yeah, sometimes they already have a financing with a competitor of ours, and they got it recently, and there's a fairly high balance on that. So we can't help that customer until they pay that down, and then we're able to pay out that existing balance. So that's sometimes like a factor that is surprising for folks. It could be, sector. There are, again, like some sectors that just have lumpy cash flow profiles that exclude folks. It could be time in business. We do need to see at least 10 grand a month in revenue. So there's occasionally a very small business that's just getting started that is maybe surprised to the downside that they can't get financing from us quite yet. But it's on us to stay in touch with that type of business so that as they grow and become eligible, we can help them with their growth.
Out of curiosity, what do you do on that end to be able to stay in touch with those borrowers that might not qualify yet, but could qualify in the future?
Yeah, we got a sophisticated sales and marketing engine with a whole bunch of different kind of like nurture cadences is what we call them. Basically, how often we touch base and what we're touching base about. So, they'd be placed in a certain cadence where, we're going to be touching base periodically to see how things are going, to see if the time might be right. So, uh, yeah, it's small business ownership is a dynamic career. Like things are always changing. Some businesses are growing, some businesses are dying. It's there's a natural sort of turnover to these things, and things are constantly evolving. So, kind of staying in touch to understand how those things are evolving and when is the right time is a really like key competency for any service provider like us.
So, what are some of the benefits that your borrowers get from choosing to get capital with merchant growth?
So they get number one is speed, right? We can get them funded same day. So apply in the morning, funded by the afternoon. It's highly automated. We have an algorithm that takes their bank transaction data, application data, credit bureau data, and comes up with an automated decision and a loan offer or a financing offer. Salesperson then walks through their different options. So once they accept one, then contracts are out for digital signature. A few other items may be requested depending on the size of the credit request, and we can get that thing funded same day. And time is of the essence in many cases when it comes to growth opportunities and the capital you need to make those happen. But also time is just valuable. So, business owners are wearing multiple hats. They're running operations, they're doing marketing, they're doing finance, and obviously they're also doing whatever, talking to customers and whatever it is that their business does. So they want to get back to doing what they love and what drives the most value for their customers. So we view our product as a way to get that time back. So they're not, scrambling around and asking friends and family for cash or, trying to get through a bank process that's likely to, result in a decline. So we get them back to work doing what they love to do. The other thing is we don't have any application fees. We don't have any origination fees. We just have the one flat financing fee that ranges depending on the term and the risk of the applicant. So it's very transparent, very simple agreement, very simple product to understand, and we pride ourselves in kind of our transparency and our service in that regard. And then again, that merchants market where we provide a whole bunch of tools and partners with exclusive offers to help people grow their business. So those are a few things that I'd say differentiate merchant growth from some of the competition that we have.
I love that. So, what are some of the things that you see when somebody comes into merchant growth? What are some of the reasons that you may, and you've talked about time in business, you've talked about revenue, for example. What are some factors that on the opposite end that you really look at an applicant and love them? Like, this is somebody where the algorithm says, yes, this is somebody we definitely want to really lend to.
Uh, Yeah, so I mean, industry obviously does explain a lot of risk factors. So certain industries are just more stable; they're just less exposed to the economic cycle. They're less seasonal, etc. So those are more predictable business models, and therefore less risky to provide credit to. Um, but that bank transaction data that's a very rich data source for us and really for any sophisticated cash flow based credit provider to small businesses. So, those bank transactions tell us a lot about how the business is being run, how the business is trending, and it's not any one thing. Obviously, showing growing revenue and healthy cash balances is going to be a good thing, but there's a whole bunch, sorry, a whole bunch of uh, different ways that we kind of cluster that data and cross-reference it with other things to get a picture. We've been using statistical models in our business since 2014, so that's over a decade ago. And those have only gotten more sophisticated and more complex. And so, it's also, there's the obvious things, like I said, but there's also things that are a little bit more tricky to really even, um, uh, they're just more complex and require a little more of a discussion to understand exactly how that gets clustered to give us a picture, if that makes sense.
What kind of loan amounts do you offer?
So we go up to $1 million. We start at 10 grand. So wide range. Um, and the more we grow, the more we also start to increase the top end of that range. But our average financing amount's around 50 grand. So, our typical customer does about 1 million in sales. And that's really kind of our ideal customer.
So on the top end, and you notice you mentioned a little bit more scrutiny for somebody that's getting a higher loan amount. What kind of scrutiny happens when you start to get the hundreds of thousands or $500,000 plus?
Yeah, at that level, we are asking for financial statements and for tax documents. Those are the two main ones that come up. Depending on the sector, we might ask for aged accounts receivable and aged accounts payable to understand how all that trade credit is running through that business. And we're more likely having a discussion with that customer. The underwriter is getting clarity on certain items and stuff like that. So there's a little bit more there, as you could reasonably expect when the credit amounts get a little bit bigger. But we still, our goal is always to make that as seamless as possible for that applicant. Our official mission statement at Merchant Growth is to bring Canadian business owners the most convenient, accessible, and trusted financing experience. And so we're laser focused on that convenience. So we're trying to bug them as little as possible, but obviously we do need to get a more full picture in certain cases.
You mentioned industries. What industries are examples of industries that you guys really prefer? And you give me an idea of ones that are more stable, that aren't as seasonal, but just, off the top of your head, like what are some industries that you guys really prefer?
Yeah, we love auto repair. That tends to perform better than most industries. Actually, I think there's more of a variable cost structure to that business than like a fine dining restaurant that has a high rent payment. Um, we uh, we really like kind of the medical space, right? So, um, doctors, dentists, physio, animal hospital, all that kind of stuff is pretty steady Eddie. We we like food service, particularly kind of the casual dining and fast food. Again, the more stable ones within that. We love grocery stores, pharmacies, kind of more essential type retail. Um, and on the kind of like trades and construction front, obviously new home construction is more volatile, but you got lots of maintenance trades that are quite steady throughout the economic cycle as well. So that gives you a bit of a flavor for the types of industries we quite like.
If I come in and get financing from you, well, what does it look like from a borrower, the likelihood that they successfully are paying that? Where in that cycle are they able to typically come back and secure additional financing?
Yeah, once they're about 30% paid down on their original balance with us. So our typical terms, again, they range from 6 months to 24 months, but our average term at origination is around 14 months. So if you take an average financing and you're kind of 30% of the way through, you're looking at maybe 3, 4 months into the deal, you've paid down enough to kind of create that relationship with us where we can, see some historical payments and understand how you're performing and get a better understanding of how you're trending as we re-underwrite you for that top up. There's just enough room in the credit relationship to top it up.
Do you have a lot of clients that are coming back again and again and again, getting financing ongoing for months or years?
At least 70% of our customers will take at least one additional financing with us at some
Wow.
point. So yeah, they see how easy it is, and if they're a growing business, they're likely to have additional capital needs. We do find that most of our customers use our product to grow. We ask them about that, but we also can see that because we track year over year revenue growth at our underlying small business customers. And we can see that our business model just self-selects for a higher growth borrower. Our typical customer is growing a fair bit quicker than the general Canadian economy is. And so when you're dealing with, a group of customers that's fast growing and you're helping them with credit, more likely than not, they're going to continue to have ongoing needs as they keep growing.
I love that. AI. We talked a little bit in the beginning about what you're doing with AI. What are you seeing develop right now in the space with AI and how it ties into what you're doing in the lending space?
Yeah, like I said earlier, we've been using statistical modeling for 12 years. That's sort of like AI 1.0. It was like machine learning algorithms, and we've been doing that type of stuff on the underwriting for a long time. As far as the language models go, we're using that to streamline the workflows in the business. That could be validating application data as it comes in, like removing some human touch points that our staff used to have to do there. We're using the LLMs to summarize things for our underwriters in a way that allows them to be more effective and efficient. And we're starting to use it to talk to customers. So, you call our customer support line after hours, you're going to talk to a voice AI. We're going to start to, do some of that sales activity with AI as well as it relates to those nurture cadences I talked about earlier. Um, so those are all pretty exciting applications. My favorite is actually like for me as a founder CEO here is like I'm thinking about strategy. I'm thinking about how do we evolve the products? How do we keep growing the business? And I love using AI to help me with that, right? To help me think through some of those big strategic questions. We use it when we do our annual strategic planning offsite. There's a guy named Jeff Woods who wrote a book called The AI Driven Leader, and I love his framework called the CRIT framework, which is a way to prompt AI where you give it context, you give the AI a role, you tell it to interview you, then you give it a task, which is, basically, give me 3 to 5 super high leverage, unique suggestions on this particular issue, right? And you go back and forth with AI, and it can really help you with your own strategic thinking. And that's the most valuable thing you can do as kind of CEO of a business. So that's been really fun, just kind of riffing with AI on strategic thought in the business. But we're early days. It's going to be everywhere, and it's fascinating to see how AI is going to change the way that we operate and businesses in general. I'm actually quite optimistic that we'll see more small businesses because there's historically been this barrier of well, I got to incorporate and I got to like review a lease document, or I need to figure out what kind of insurance, or there's all these administrative like kind of information heavy but somewhat complex things that need to be worked out to start a business that were intimidating for people and maybe put people off of starting a business. But now you can have AI kind of help you with all these different things, get you going. So I'm hopeful that we'll actually see small business ownership, becoming a more accessible career path for many people in the future.
Yeah, it's interesting. I've had Perry Belcher was on the show. He's one of the top marketers I know of, like in the United States. And he was talking about, they said most people use AI as their slave. I liked how he worded it. And then, versus strategy. And he talked about how it really should be used for general highlights level strategy. As founder CEO, it's cool to be able, like you said, to riff with the AI and get the ideas and concepts you just never would have even thought of before and kind of where it takes you. So I'm interested to see like, and this is something I always love asking our lender partners is, what do you see AI where it comes to the human touch? Like, do you think that your borrowers want less or more of a human touch? Do you see a world where there will always be people involved in both the underwriting side and in the communicative side on the sales side? Or do you think that borrowers want to get back to a point where it's just all driven by tech and there really isn't human intervention?
I think you're going to have tech in sales. Or sorry. Let me repeat that. I think you're going to continue to have people in sales. I think that this is a high ticket purchase. Um, Ultimately, when you're entering into a financing arrangement like this, you want to get comfort, you want to build trust, and from our perspective as a business, sort of like walking people through their options and getting their commitment, like that has plays a meaningful role in getting the conversion rate to where we need it to be in our business. So I think that you're still going to have people on the sales front. Obviously, they're going to be able to handle more than they used to be able to handle. So, on a per number of leads per day basis, or for how many customers they generally have in their portfolio as a salesperson. You're going to see them be able to deal with more people at once. But I still think you're going to have people there. On the underwriting side, I'd kind of say same thing there, right? Like you're going to be able to autopilot a lot more of the credit requests through an algorithm. And that's all well and good, but you're always going to have exceptions. You're always going to have things that flag out, that kick out of the automated process, that might need another review and might need actual discussion with that business owner, right? So, again, I think underwriters will be able to handle a lot more, but you're still going to need some of them. I think you're going to get more leverage on the AI in the underwriting than you will in the sales. Is what just from my vantage point, what I'm seeing today, and I believe those trends will continue the way they have been.
Yeah, that's interesting. I just think it's really cool to get everybody's perspective because some are more leaning more in and just feel like humans won't even be part of it, and then some feel like that it's really an equal, and then some feel like it's not as equal. So I think it's interesting. So let me ask you this: what do you from what has helped you grow merchant growth to the size that it is? Because like you are one of the biggest, if not the biggest players in the alternative space in Canada. So what has been really the secret success formula to help you help as many business owners as what you've helped and continue to?
I think being clear on that mission of convenience, accessibility, and trust has been helpful. I think that our statistical approach to underwriting and the risk-based pricing model that we use have also been a key factor. Like I said, we were early on including stats in the business, and by pricing risk accurately, we can say yes to a lot of applicants, but do it in an economically feasible way across a really wide credit spectrum. So we're able to win, price sensitive, low risk customers because we know how to identify them and offer them product that they'll actually, take. Whereas, but also, not say no to the riskier end and, just price it where it has to price to compensate for that risk so that on a pool of credits, we still end up netting out to, the return we need to for our investors as we, think about our role as a fiduciary. So there's, uh, our competitors were a little bit more one size fits all. Here's our rate, and away you go. And I think we've been able to be more precise around that. That's helped us win a lot of business. I think that our funding model, we use a credit fund that we run called Merchant Opportunities Fund. That's provided us with a scalable capital base at a good cost, and I think that's allowed us to be competitive. So it's not any one thing. It's kind of a machine with a whole bunch of different numbers running through it that kind of make it work. But you know, just staying focused and working hard. But yeah, I think those couple of factors I just mentioned, separate us from the pack, and it's probably why we're now in that market leading position.
I love it. Hey, I really appreciate you coming on with us today, David. If somebody's interested in going in and getting approved, where should they go? What should they do next?
Merchantgrowth.com, click get financing, start walking through it. We'll be in touch real quick, and we can get you funded same day if that's what you need.
All right. Thank you very much again for coming in.
Yeah, thanks. That's awesome.
So
Appreciate
listen,
it.
what I love about merchant growth is, I mean, they have figured it out. They have figured out the model, not just really in the Canadian market, but in the US market as well. And by the way, if you are a US lender, then they might be able to help you actually get some of the funding that you need to be able to actually send out to your clients. So something to keep in mind. But when it comes to the Canadian market, you've been looking for like one of the best sources to get capital. And that's why we brought merchant growth on, because they are really, in my opinion, the best at what they do. They are super fast. When we talk about same day funding, they are very smart in what they do. And he articulated it in a way that is way better than I would. But I will tell you that for low risk, you're going to get great rates and terms. But what I love, and you hear me say this on the show all the time, is I love high risk because that means somebody is willing to help you where years ago they would not have been willing to help you. And they can help you in those cases too, which are a little bit higher risk. They can help you on the low end of just getting started all the way up to $1 million in funding, which is unlike most that are in the space. They're not going up to $1 million in funding. So it's kind of like one-stop shop, and they grow with you. They're able to, as you start paying the funding down, give you even more funding. 70% of their clients come back. As I say on the show, that is the best indicator of how well somebody treats their customers, is the percentage of people that are coming back. That's a really high percentage of people coming back. So you have it all in one package, in one company, in one place, and it's Merchant Growth. So make sure you check out merchantgrowth.com. While you're at merchantgrowth.com, you can either click get started on the top, or you can go a little bit further down and you can go get financing. Either way, you're going to be able to get into a very fast, easy process. process, and even start the path down getting same day funding with Merchant Growth. So check them out today at merchantgrowth.com. Thanks for tuning in. Take care and have a great day.